Review. I'm your host, Robin Murray, here today with two special guests making their debut, Associate Portfolio Managers Josh Jenkins and Coach Chiitas. Hey, guys.
Hey, how's it going?
Good.
Great to be here.
Good. Josh, let's start with you. How did the markets do last week?
It was a rough week for the markets. There wasn't a lot of economic data that came out in the U.S., so I think the focus was really on earnings. There were a few that had good results, including Amazon, and a few other big ones missed results or disappointed, and that would be including Apple and Microsoft. Generally speaking, equity markets were down on the week, both domestically and internationally. Commodities were also down. I guess the one bright spot would be the fixed income markets. Yields were down a little bit over the week, which allowed them to eke out a small gain.
Okay, and speaking of equities, Coach, how's our high quality theme doing?
Well, I'm really sorry to say, but high quality has not worked so far this year. The broad quality factor has performed about in line with the broad equity market, but a subset of it called dividend growers has underperformed quite a bit. And unfortunately, CLS does have a large allocation to dividend growers. The reason dividend growers have underperformed can be attributable to just a handful of companies, some of the large industrial giants like Walmart, Qualcomm, and ExxonMobil. Now, do we still believe in the quality theme? Absolutely. Quality should not really be measured over short periods of time because it's been proven to work over long-term periods. In the current environment, where the U.S. market is trading at high valuations, we still do believe that quality will hold up better on a relative basis as it typically does in volatile markets.
Okay, Josh, how about one of our other investment themes, tactical fixed income? How are we doing there?
So tactical fixed income is doing well. Again, CLS believes that the bond returns moving forward are probably going to be below average, and that's mainly because interest rates right now are just at such low levels. So far this year, we've been positioned with short duration, which has helped as bond yields in general have risen a lot from their first quarter lows. We've also made some trades into and gained some exposure into emerging market bonds based on strong valuations, and exposure to bank loans has also helped portfolios. So again, we believe staying active, being tactical, and taking advantage of the opportunities based on relative valuations is gonna help us add value to portfolios.
Okay, great. And I want to close today by kind of getting a behind-the-scenes look at where some of this data comes from. As associate portfolio managers, what's like a typical day for you guys?
Well, there's not really a typical day. Every day we come in is something completely new, and quite frankly, I love that about the job. It's very exciting. I guess one of our big responsibilities, though, would be to produce a lot of the materials that we use in making investment decisions. And we really come together as a group and hash those out through a series of different meetings and calls. And then we come together in some periodic meetings and really hash a lot of this out, and it generates a healthy level of debate.
Yes, those are always great. Another big key thing we do is we do a lot of support on the phone. We support our sales team, and we're always eager to answer any questions they may have, and we're always ready to jump on the line with a rep to explain anything that needs to be explained. We also talk with a lot of ETF issuers. We want to make sure we do all of the due diligence on the ETFs we purchase. And lastly, we talk with a lot of trade desks because we won't always want to make sure execution plays a big role. And then last but not least, we support the portfolio managers. And we have lots of tools at our disposal to do that and provide all the research they need.
Great. All right. Well, thanks for joining us today, guys.
Absolutely.
All right, that's it for this week. Join us again next Tuesday, and thank you for your time and trust in CLS Investments.